Today, we're diving into a company that's making a huge, high-stakes bet on becoming the absolute backbone of India's entire AI industry. The company? E2E Networks.
Now that is a bold claim. E2E isn't just trying to be another AI startup. No, they're positioning themselves as the ones selling the picks and shovels in the middle of a massive AI gold rush. So let's see if that claim actually holds up.
All right, let's get into part one, the big bet on India's AI infrastructure. So who exactly is E2E Networks? Let's break down what they do, and more importantly, why they're suddenly in the spotlight.
Okay, so think of it like this. They're building the digital highways and the power plants for India's AI revolution. They aren't the ones making the AI models you hear about. Nope, they're providing the raw, brute force computing power, those super high-end, absolutely essential GPUs that every single AI company needs just to get off the ground.
Now this is where you can really see their strategy coming together. Getting government backing from METI, that's not just a nice little stamp of approval. That opens the door to massive public sector projects. Partnering with NVIDIA, that means you get access to the best tech in the world. And having L&T in your corner provides the heavy lifting muscle to actually build out the data centers. And you can see they're already trusted by some huge names like Nykaa. This isn't just some plan on a whiteboard. It's a well-oiled machine that's already moving.
So, part two, the prize. With a setup like that, you'd expect to see some pretty serious growth, right? Well, let me tell you, the numbers do not disappoint. Let's take a look at the results of this strategy.
And here they are. Just look at that curve. From FY22 to the projections for FY25, sales are on track to more than triple. But honestly, the real story here is the bottom line. Net profit is projected to explode by nearly 8 times. That, my friends, is the very definition of hypergrowth.
To put it as simply as possible, we are talking about a potential 5-fold jump in revenue in just a handful of years. That is pure, unadulterated acceleration, and it's all being fueled by this just insatiable demand for AI computing power.
And this isn't just hope or speculation based on past performance. The analysis points to a whole pipeline of growth triggers. You've got guaranteed demand locked in with government orders, a massive technology upgrade with the latest NVIDIA chips, and the ability to seriously scale up with that L&T partnership. It's really like a 3-pronged attack to just cement their position in the market.
All right, on to part 3, the price. Because let's be real, this kind of explosive growth is never free. It's a very costly wager. And that's where we have to look at the other side of the coin, the risk.
So, if the growth story is so incredible, what's the catch? I mean, it almost seems a little too good to be true, doesn't it? To find the answer, you just gotta follow the money.
And the catch is right here. Just look at this contrast. Historically, this was an incredibly profitable business. We're talking operating margins north of 50%. But in the most recent quarter, that swung all the way to a negative 8%. Wow. That is a dramatic shift that definitely needs some explaining.
And here's the reason why. A massive 870 crore rupee capital expenditure. They are pouring an enormous amount of money into buying those super expensive NVIDIA GPUs, betting that the future profits are going to more than justify this huge upfront cost.
This analogy from the source material really makes it crystal clear. It's a classic case of short-term pain for long-term gain. They're building the AI factory of the future, and construction is expensive and messy. The entire bet, the whole thing, hinges on whether the demand they're expecting will actually show up to fill that factory once it's built.
So, while the strategy is clear, the execution is absolutely everything. That short-term dip in earnings, that's a given. But can they raise the money they need without hurting existing shareholders too much? Can they get all these new GPUs up and running without any major delays? And maybe most importantly, can they hold off the global giants, we're talking AWS, Google, who are also fighting for a piece of this market?
Okay, so that brings us to part 4, the analysts' verdict. We've seen the incredible prize they're chasing, and we've seen the significant price they're paying to get there. So how does the analysis weigh these two sides? What's the final call?
Well, from a short-term perspective, the technical indicators in the report actually look pretty positive. The market seems to have swallowed the news about all the heavy spending and is now looking forward. It's created this V-shaped pattern, which analysts often see as a sign that bullish sentiment is coming back.
And this all comes together in the final verdict. The recommendation is to accumulate on dips, basically to use moments of weakness as a potential entry point. The short-term target reflects that current positive momentum, while the long-term prize, well, that remains unchanged, becoming the undisputed leader for AI infrastructure in India.
And this is the ultimate payoff that the analysis suggests is possible. The term multibagger, that's just investors' slang for a stock that could return many, many times its initial investment. But you have to notice that critical condition there if GPU utilization ramps up as planned. It all comes back to their big bet on building that AI factory and then filling it with customers.
You know, this final question really gets to the heart of the whole thing. Who will build the foundation for India's AI dream? E2E Networks is making a very bold claim to be that builder. And whether they succeed, well, that's not just a company story. It's a crucial part of India's entire technological future. And before we wrap up, it is absolutely essential to remember that this has just been an explainer of an external analysis. It's meant for educational purposes only, and it is definitely not financial advice. Please always do your own thorough research before making any kind of investment decisions.